What's up, everybody? It is Monday, the start of a new trading week, and today we have what is called a risk off day. It's when the market is in sell-off mode because of whatever reason. But most of the stocks in my watch list are down. The only one that's, well, it's a couple that's up, but Coinbase is up significantly today. I didn't get a signal on this move, but I'm happy to see that the volume is picking up on it. As you know, remember that I was talking about how light the volume was, but the volume is picking up, and you see these options are up 300, 400% on a 12% move. So by that being the case, Bitcoin must be up. Excuse me. Coinbase is up, but Riot is down 10%. I had Bitcoin in here. Let me add that. Oh, here it is. Bitcoin is up only slightly. As you can see, this doesn't have any options. Bitcoin doesn't have like an index where options can be traded on it. So you have things that are linked to Bitcoin that I track, like Coinbase and Riot. Although they are going to have a Bitcoin ETF, which I can't wait till they debut, which will give some opportunity there. But looking at these scans, I'm getting a 2-day signal on Apple, which I'll wait for the daily to line up with that before I even execute. I got A, B, and B, which I might be, I'm going to execute that trade. Let me see what the options at. The 165 call. That's a little too expensive. That's a 12% move. Move. Oh, I see why they report. They report on Wednesday, Thursday. So that's why the options are expensive. So you know what my motto is. I have to forego that trade, because you're not going to hit me with the banana in the tailpipe. So I'll pass on that. Because laying $140 something on a 12% bet, although you do have the event, still that's nah. I'll pass on that. I got a 2-day signal on Amazon, 2-day signal on Baidu, which I've highlighted. I got a daily signal on, I got a lineup on Shopify, but let me see if they report as well. No, they don't report until August. But remember, I told you Shopify options are expensive too. I'll show you that in a minute. Yeah, Shopify is just like Amazon and Google and Tesla. But if you catch it and you catch it right, you could really come up. So on the call side, look at these options prices. Shopify is at 1084. So anything above 1084 would be considered out of the money. This is 1085, so this is at the money. And at the money contract is $2,298. If you wanted to bet that Shopify was going to go to $1,100, that's $1,700 you got to lay. If you wanted to bet, look, my price is not even, I don't even have a green check, so it's out of my price range. I would have to add to these strikes, add the number of strikes. Probably would have to go up to about 80 to get to my price range. But even at $11.50, that's $450. Do I have it in my account? I do. Am I comfortable with that risk? No. You know, even though it could be within my 5%, you guys see me do it on Amazon. But I felt that was a high probability trade. And if I remember correctly, I think it was an expiration trade. I think it was 1 day to expiration. And if you remember, there was $100 move on the downside that I was betting on. And it gave me a signal on Amazon that I hadn't seen in a minute. And I remembered it. I remembered the pattern, and that's why I took the risk, and I doubled up on it. The contract was $400, and I doubled up on it. But that was Amazon. Let's see, DraftKings is popping up. TWLO. See if they TWLO. Do they report? So I'm looking at the pattern. Let's see what the option costs. At 320. Price is at 294. And that's an 11% move. Now, when I'm comfortable with bets like of the 11% move or something like that, you would see me do that trade. Like if the weekly, all of these line up like on a Friday and say the same thing, or if the weekly gave a buy signal here, and then Monday, the daily said the same thing, I would take that trade. But 11% move, not saying that it can't happen, because anything can happen. One thing you gotta remember, anything can happen. Anything, any type of news can come out on this stock, and it could be a pop. Volume is kind of light too. Uber. Lyft was giving something too. Uber, Lyft. $48. This is strike. Is jump. It jumps from 46 to 47.50. It should be 47. That's weird. I wish AB&B wasn't reporting. I would take that trade. I like that formation. DraftKings changed up. Lift had a signal on the weekly chart. I need that daily to line up with it. 49. $50. I might try to get into this at 10 o'clock in the morning. I think it's going to sell off some more and then I'm going to snatch it. Uber as well. So I'll hold off until tomorrow. See what other signals it gives me. The AB&B, I'm definitely not going to take. Now, if this was last week and I got this signal and they reported this week, I would take the trade. But I just can't. I just can't see laying that for a 12% move, knowing that the options are going to expire worthless. It's just not in your interest, typically during earnings, to be a buyer of options. Now, if you were on the opposite side and you was writing the contracts, the odds are in your favor. But to be a buyer, nah. Been burned too many times, as I've told you guys before. But let me show you this. I'm gonna do a video on this because this is how I want to, educate you guys as to what I'm doing with these trades, and I want to explain in detail these statistics here: your win percentage, payoff ratio, and expectancy, and how the most important statistic is not your win percentage, which means how often you're right. How many times you're right on a trade. Meaning out of 10 times, are you 100% right? Or are you 50% right? Your payoff ratio is pretty much how much you're making on your risk. And then your expectancy tells you how much you're making dollar for dollar over time on what you risk. This is the most important statistic that you want to keep an eye on, because it lets you know how much money your system is going to make over time on average. So I'm going to start. I started from last week's trades. So I put the Boeing in there, and I'm going to put a few others in there, and then I'll do a video, because I think this will give you a better understanding of what trading is all about. and how it's not about how many times you're right. It's about when you're right, how much you're getting paid for being right. It's the profits related to your losses. Do you have an average payoff ratio of 3-to-1? Or say 1-to-1? You see what I'm saying? You could have a system that's 50% accurate, and if your payoff ratio and expectancy is high enough, you would make money over time. And what I mean by that, say on your fifth trade, or let's say, not your fifth trade, but let's say you take 100 trades. 50 trades are losers, and 50 trades are winners. So that's a 50% win percentage. But on those 50 trades that you won, maybe 30 out of those 50, you had a 10-time win ratio, meaning you made 10 times your risk, which took your expectancy up strongly. So it negated whatever you lost on your losers. Your losers don't even matter because your payoff ratio on your wins were large enough that it took care of the losses. So I started to log in the trades from last week, and I'm gonna finish that. And then every trade we're gonna log. And the reason why I'm doing that is to give you a better understanding of what trading is about. So I'll hit you guys tomorrow. Thanks for listening.